PR Connections Radio presents. This show is brought to you by Paid Per Letter. Write letters and make a difference. paidperletter.com/Uncle Dan.
Hi, my name is Penny Tindall, and I am the new host for the podcast called The Professionals. We will be broadcasting this podcast live every first and third Wednesday of the month at 10:15 a.m. Tune in and learn about local businesses and their innovative minds behind them. Each episode, we will journey through the unique stories of our neighborhood entrepreneurs and nonprofits and uncover their passion, the challenges, and the triumphs that drive our local economy. Join us as we explore how dedicated individuals are crafting not only vibrant enterprises, but also are more connected to our local Las Vegas and Henderson community. Stay tuned. I'll see you soon. Penny Tindall. Hello, Las Vegas. This is Penny Tindall, and I have my guest and good time friend, Claudine West with Movement Mortgage. Hello, Claudine.
Good morning. Thank you for having me, Penny.
Yes. So we were talking backstage. We've known each other for a long time. And I purchased my first home from you in 2000. It was a brand new build, but I used you. Yeah. And so why don't you tell us a little bit about how long have you been in the lending business?
Gosh, I have been in the mortgage industry and a loan officer for close to 31 years now.
Wow. So you started young. You started at 9 years old. We all love that. I knew you were super smart, so that makes sense. You were a protege or whatever. But I love that. So we were talking, and I had heard this before, but I think it's so important to let the viewers know what you did before you jumping into lending and how that can help them.
Sure, absolutely. Well, growing up and in college, my dream was to become a teacher. And I was on the path to becoming a high school English and French teacher. That's what I wanted. Also, English as a second language. I studied that as well. And during my student teaching and halfway through my master's, I decided that I had a change of heart. I thought I would try something else. Just put, teaching on pause just to make sure that, I wasn't making a mistake. And I went to work for a finance company, and I was helping them originate second mortgages. And I really liked it, and just kind of stuck. So I never did become a high school English teacher.
Well, I think I would love you as an English teacher. You would be marking a lot of misspelled words because we did not have auto check. So right. I always tell people I got good grades on content, but grammar, absolutely no. I would have loved to have what we have now, and also the AI. I have used it a couple times to make me sound a little bit more educated. But I love that you were, an English teacher. So your mindset has always been to educate people, right?
Correct.
Educate our home buyers and our home sellers. So you know what I love? You're wearing your hat, and you're a woman of many hats. And how did you come up with Claudine West, a Movement Mortgage? Your
Mortgage Maven.
Maven. I love that. So tell me the story about that.
Yeah. So when I decided to parlay into financing and loans instead of becoming a teacher, my stepfather at the time, may he rest in peace, he was Jewish, and he said, "You're going to be a fantastic mortgage maven." Maven means expert in Yiddish and in Hebrew. So it just kind of stuck.
I love that. I love that. And you are also trademarked to wear some hats. So when we go through our presentation, there'll be a great opportunity for you to show us your different hats, as they say, because we all have to pivot and we all are working with different home buyers, different situations, right? Nothing
Right.
is the same story, as they say,
Mm-hmm.
right?
Correct.
So
Correct.
we were just talking about this. A lot of people want to jump in and buy a home. And right now in the media and in the news, it's all about wellness, mindset. And we
Mm-hmm.
were talking about not only mental wellness, but wealth wellness,
Mm-hmm.
right? How
Financial.
are your finances financial?
Yeah.
So
Right.
let's talk about what you can do for those folks that believe they're considering buying a home.
Mm-hmm.
What are the first steps for them to do?
Okay. First step is to reach out to me, Mortgage Maven, and I will provide them with a path to home ownership. So even if they may not be ready now, I'm going to give them a path, a checklist of to-dos to get them ready in 6 months or 12 months or 2 years. And
Right.
it all starts with the evaluation of credit, income from a job or self-employment, and their outstanding debts that they may have. Maybe they need to pay some debts off or pay them down. So I explore and educate on how to budget and save for down payment, and what bills to pay off and how to utilize credit cards effectively, and so that their credit score has optimum benefits.
Right.
So yeah.
You talk about that. So a lot of times people say, you know what? I paid off all my credit cards. I owe no one nothing. I
Mhm.
have my savings. So why don't you talk about not owing someone, basically having a credit line that you're not using? Is that something that you would like say that's great or
It really depends on the individual and how much credit history they do have.
Mhm.
Sometimes it's better to carry a very small balance on a credit card, uh, at $50 or under. Um, Typically, you want to keep any revolving debt, any credit cards, the outstanding balances at less than 30% of your available credit line. So, say you have a Capital One MasterCard available to you. For the optimization of the best credit score, you want to keep your balance under $300 at all times on this credit card.
so if you had $1,000 credit line, you want
Line,
to have, yeah, you want to have like $300, stay
correct.
under
Correct.
that, but
Correct.
keep some kind of balance because it just wants to prove that you're paying your bills. You can afford to pay your bills, correct?
Exactly. Exactly. And sometimes when we pay off credit cards in full, we don't get the optimum um, utilization calculated in our score. It's very complicated with the
Right.
crazy algorithms. So sometimes it's worthwhile just to keep like a $20 balance on a silly credit card. So
I
once a
love
month,
that.
we'll charge something at Target for $20 and then pay it off because you're continuing to use the credit line that will help your score.
Yes, I think that's what you had did for me because I had a Target credit card and I was like, I'm going to pay it off, and
Yeah.
I had a small balance, so you're like, you know what, buy your toilet paper there and then pay for your toilet paper, every month or whatever. So, or diapers because I had a new baby.
Right.
So
That's right.
that was my added expense, diapers and formula on
Yeah.
Target. That's
Yes.
what I did for my Target card. So that
Yes.
makes a lot of sense. And,
Mhm.
with regards to your education, I know you're working in the pipeline for, helping people prep work, right? Prep work to
Correct.
see if they're ready financially. What are you calling that? And
So
and how can people get involved with that?
yeah, I'm currently working on a buyer's academy. All of my videos will be complete by end of summer. It'll be on YouTube. So what I share during a one-on-one, an intro with a client, I'm going to put on video. So that'll be nice. So it would be easy for anyone to access at any time. Of course, I love meeting people face to face. That's me.
Right.
We're Gen X, and I like face to face.
I do too. And we were just talking because we are also part of a couple network groups.
Yeah.
And so, this is the professional podcast. So I always ask, my businesses, who or what are your power partners for those folks out there? Maybe they don't need to buy a house yet. Who would be your power partners, Claudine, if they're not ready to jump in the boat or something like that?
Sure. Power partners would be realtors, of course, accountants, insurance agents. Those are the 3 top power partners.
Right.
But of course, anyone who has a friend,
Right.
mother, a sister, an aunt, an uncle, a grandson, a nephew is looking to buy a home, because I can put them on the right path to homeownership.
Yes, I love that. So I know that you have, when you meet people, you want to connect, and you obviously are well educated and you have passion for your industry. But I know you have some really great hobbies, because we were talking about mindfulness and wellness. So why don't you chat briefly about, how you keep your mindset, your mindset right?
Sure. Well, being in real estate, in the mortgage sector, can be very stressful, especially these days. So I kind of keep in check by working out a lot. I enjoy weightlifting and Pilates and hiking. Now it's going to be hiking up at Mount Charleston and not Red Rock.
Right.
Meditation, drinking some delicious red wine. That's my favorite. Doing some traveling on weekends. So that's how I stay sane.
Stay sane, yes, because that's what we were talking about in many instances of, keeping your mindset, remembering to reboot, because bad things do happen to good people. We need to move forward and pivot, as they say. So let's get to the meat and potatoes.
Okay.
I think there's opportunities for home buyers right now. So let's talk about not really free money, but let's talk about what opportunities there are out there for our people looking to purchase a home.
Okay. All right. So there are a lot of low down, small down payment opportunities. In addition to that, there are a lot of grants, down payment assistance, other opportunities. So currently with what's available here in Southern Nevada Partners, we have the WISH program. We have a culinary program where members of the culinary union can actually acquire up to 20 grand to purchase a home through WISH. This is grant. You can actually have Nevada Partners match. It's a 4-to-1 match. So if you have $1,000 to contribute to your down payment and closing costs, through Nevada Partners, you can obtain up to $4 grand. Or if you had $7 grand, now you have 28. So
that's incredible. How would someone know that they could get the Nevada Partners? What are some of the specifics?
Okay.
Is there a credit issue or something?
There are some income limitations, so I would need to evaluate your income first, of course. There are some credit score requirements as well. So first step is to check in with me to see if you are eligible for the Nevada Partners. WISH.
We're all paying Nevada Power, so we're all part of that program. I'm sorry to say,
It's true.
Yes.
It's true.
So, the WISH program, I have used the WISH program, because right now, many people are moving to Las Vegas. No matter what is going on with the economy, we have a big flux of people coming in, and
Mhm.
we have low inventory. And so these people coming in, they're coming to do rentals because they don't really know where they want to go. They're
Right.
relocating. A lot of people are actually relocating even though they work virtually because they feel that Las Vegas is more economically inviting,
Mhm.
like for California or from the East Coast. But I feel that the Nevada residents, we kind of are struggling to get home ownership
Mhm.
because for everybody else moving in here, maybe they can afford it. But from
Mhm.
350, we have 450,000. Our house average price went up about $100,000,
Mhm. Mhm.
right? Thank
Mhm.
you, California. But you want to move where you want to move, right?
Right.
So for me, um, when we talk about rentals, a lot of times people have to put a lot of money down. They have to put the rent down, let's say
Mhm.
$2,200. They have to put the security deposit down
Deposit.
2,200. They have two dogs, another 1,000. I
Right.
mean, an average, because I do partner with my property management company, the average deposit for a rental is $5,000.
Mhm.
That's the average.
Mhm.
So with these grant programs, can somebody come in and purchase a house, like under 400,000 for in their pocket, seven under 10 grand? Can somebody do that if they qualify for these programs?
Absolutely. Just this year, I've closed three transactions where the buyer was able to acquire down payment assistance grant. Seller contributed a good 3%, and they came in with less than $5,000.
Incredible. That's
Mhm.
great news. I mean,
Mhm.
that really is great news because the whole point is if you really want to buy a home, there is opportunity. The main thing is to educate, check your wellness, right? Where you need to correct. Now, a lot of times, like I always tell people, good people have bad credit. And so a lot of folks
Absolutely.
believe that they need to have a credit score of, 650, 675. Why don't you talk about more the FHA and,
Sure.
the other credit issues that people, you know, feel like they can't do it because their credit is not where they need it to be.
Mhm. Mhm. Well, currently, you all you need to utilize FHA financing is a 580 credit score. With a credit score of 580, though, you would not be able to qualify for any grants or down payment assistance,
Okay.
but you would be able to buy a home if you have 3.5% of your own money to put down.
Okay, 3.5%. That's
Sure.
very fair.
Absolutely.
Now, what is the requirement for like the wish and the culinary? What is their credit report need to be?
Yes, I believe we're at 640. I'd have to look at my guidelines, but
Okay.
we're looking at 640 for those programs. Also, home is possible.
Oh yes, Home is Possible is an amazing
Yes.
program. Do they still have a program for the educators, teachers that
Yes.
are out there,
Yes, they do.
military?
It was just renewed actually 2 days ago. So,
We need our teachers, and we are looking for teachers. Education is so vital. People move to areas where they feel they have better schools and
mhm,
everything, but we have a lot of magnet schools, and other schools out there that are free. So when
mhm,
I have people come into the city, I'm like, you don't have to pay for private school if you can't afford it. There are
right.
magnet programs out there
Mhm, and
that
charter. Yeah.
charter
Mhm,
schools that you can do. A lot of
mhm,
kids doing virtual. So
right.
then that expands where they can purchase,
Yeah.
right?
Yeah.
So I think that a lot of people, the main thing, everything is circling back around is find your expert, and you as the Yiddish mortgage maven, you are the expert. You have the time, the experience, and the passion, right, to get
Mhm.
people into homes.
Absolutely.
So, how about what can you do for someone that owns currently a home and maybe wants to jump into the investment, or maybe wants to, dare say it, reverse mortgage?
Sure, sure. Well, let's start with debt consolidation first. Lately, I've been seeing a lot of homeowners and non-homeowners with um, a lot of revolving debt, a lot of credit card debt.
Mm.
With inflation, it's really hit us in the gut, and I see more and more revolving debt. There is a lot of equity in our properties, thank goodness. So there is an opportunity to acquire a home equity line of credit, or maybe even a cash out refinance to wipe out some of this debt. Just recently, I've helped on 3 separate occasions some lovely clients who were just overwhelmed with about $50,000 to $60,000 revolving debt. So we did a cash out refinance and got them back on track. So
Yes, because financially, if you're financially struggling and you have a home, there could be some great options for you. And it
absolutely.
also works for seniors. The seniors are getting a big hit.
Yes.
And, there's so many things going on with insurance and everything. The seniors in our marketplace, um, they're not prepared to retire a lot of times. So I know that. We had talked briefly about reverse mortgages. That's
Mhm.
something you can do, right?
Yes. 62 or over. You do need to, if you're already in the home, the older you are, the more benefits that you'd receive from the
Right.
reverse mortgage. But 62 is the minimum age for a reverse. So I did help some seniors late last year um, refinance with using a reverse mortgage. So now they no longer have a forward monthly mortgage payment that was strapping them.
Right.
Then they also receive a supplement from the reverse mortgage every month at $1,500. So they no longer have a mortgage payment, and they have an extra $1,500 coming every
That's
month
perfect.
for the
Bingo
rest of
money.
the year.
Bingo money. No, I
Yeah.
think that this is important because people are not as savvy with their money. But if you
Mhm,
have a home and you're sitting on equity, this is a great
mhm,
opportunity.
mhm,
And then to do another hat, throw another hat in the ring. I have
mhm,
a gentleman that paid their cash for their home,
mhm.
and he wants to invest in a rental income because he's 60, maybe 60 years old.
Okay.
Is there a way that he can purchase like a condo or something and still stay in his home with his equity, especially if he already paid cash for it? So it's 100% his house.
Sure. Sure. Is he a senior or no?
He is a senior,
Oh, okay. Okay.
and he's like, I have 200,000 burning a hole in my pocket. I'm like, 200,000 is not going to buy you too much.
Yeah.
Why don't you, go invest that? I'm not a
Exactly.
financial planner, but
Right.
you have a $700,000 house in Sun
Mhm.
City. You can pull some money out of that because this
Absolutely.
is your forever home, right?
You
So
could take
how
the
how
reverse
can
mortgage, have
right?
no monthly mortgage payments with the reverse, get a huge lump sum out, invest that into a new investment property,
Perfect.
and now he's got additional income from.
So the age on that is 62. That's the bright light,
Correct.
62 or older, right?
Correct.
So I would definitely have some referrals for you on that, because I think that people have a negative connotation,
Mhm,
because like you talk about,
mhm,
the industry changes all the
mhm,
time. We
mhm.
have to pivot. You change your hat, and then you see what's the best for your client, correct?
Correct. Of course.
Okay.
Absolutely.
So we have about 5 minutes, and Claudine, we have buyers and sellers. I know sellers are, paying points because of the interest rate, and I really don't like. Can you explain what it is for the buyers going, because maybe their agents don't know what it is to get the points bought down by the seller?
Sure. So buyers do, if the seller is willing
Right.
to contribute money towards closing costs, you can take this money from the seller contribution and use it towards buying down your rate of interest. So, for instance, today, if you were buying a home and you were not paying any points whatsoever on this home, and it's a conventional loan,
Right.
you have good credit, your interest rate would be just about 7.25% with no points. If you had a seller that was willing to contribute money to buy down your rate and say pay 2 points, we'll call it $10,000. Now your interest rate would be about 6.625, and therefore saving you a good chunk of change each month. Of course, you need a
Yes.
seller to be willing to do that. So
I
the
think.
buyer can always pay that on their own as well.
Oh.
Yeah.
Okay, perfect. So if somebody says to you, Claudine, you just came down, I got some of these programs, but I still have some money in my pocket, or somebody wants to gift me money
Mhm.
To help me buy down the points. Is there a formula on how much it costs to buy down the point? Does it have to do with the
It has
home?
to do with the rates themselves and the fluctuations yeah.
Okay, perfect.
So
And is there a restriction on how much, I mean, as long as it's accounted for, how much money you can get as a gift? Like
as
if
a
I,
gift, okay,
yeah, like my uncle wants to
right.
give me 20,000 and I'm
Right.
going to use it to, buy down. How,
Right.
is that okay? I mean, how
Yes,
does it work?
there are tax implications, and I am not an accountant, so I can't speak for that. But there are, I have seen opportunities for people to receive huge gifts from grandparents and
Right.
parents, but they do need to reach out to their tax professionals to see what
Okay,
would.
yes. There is not really a minimum or a maximum, is there?
No. Mm-mm.
No. Okay, because I know that, I've had someone give $25,000,
Mhm.
but I didn't know, I'm just on the other end. So I'm like, wow, that's super nice. Because
Correct.
they wanted to make sure their payment was affordable. Of
Right.
course, it's affordable because they wouldn't have got the loan. But stuff happens, and a lot of times people overextend themselves because stuff happens. The
Mhm.
Mirage is going to close down. I mean, I don't know how many people are at the
Mhm.
Mirage, but even if you give me 2 months or 3 months or 6 months, that's a big deal when you're a
Right.
salaried employee, right?
Right. Exactly.
So, okay,
Yes.
so perfect. So we've got 2 minutes. And so I just want to thank everybody for tuning in. This is Claudine West with Movement Mortgage. She is our mortgage maven, our expert in lending. She can help buyers and sellers.
Mhm.
She is here to educate you and to be your power partner in your real estate needs. So go ahead, Claudine, and do a shout out for yourself and let folks know how they can get a hold of you.
Okay. Again, I'm your Maven, and what I'm passionate about more than anything else is helping individuals and families buy homes. And oftentimes I do this with little or no money down and less than perfect credit. And you can reach me at 702-498-8305.
Perfect. So the best thing is for them to give you a call and just do a free consultation, and it could be an easy phone, and then you can send them a link if they're ready to rock, right?
Correct. Absolutely.
Okay, perfect. So that is the end of our show. Please reach out to Claudine. Like I said, I've used her myself. She is amazing. She's passionate and she doesn't talk fast like me. So you're going to understand every step. Because I know so many people that just says, send it, I'll sign it. And I'm like, no, you need to know what you're signing.
Yeah.
And so thanks again, everybody. Penny Tindall signing out of The Professionals. If you're interested in being in this broadcast, reach out to me at 702-420-8964. Penny Tindall. Thanks again. Bye-bye, everyone.
Thank you, Penny.
You're welcome. Bye-bye.
PR Connections Radio thanks you for watching this podcast. Check out more episodes of this show and our others at prconnectionsradio.com.